Let's get some stocks on the move now. We start with Merck. Earnings beat. They cut their full-year profit outlook due to tariffs. The stock is a marginal loser today. Jason Snipe owns it.
So I'm actually not in Merck.
You're not in Merck.
But yeah.
Oh, I'm sorry. My bad. You own the IBB.
I do own the IBB.
My bad.
But obviously, I mean, this is kind of just in the array and that arena of healthcare and obviously the tariff concerns. I mean, $200 million expected tariff hit obviously is a hit to the stock and a hit to guidance. So when I look at names in that space, I mean, Gilead has been one of the names that has worked, hasn't worked as well recently, but there's just an overhang in the space just related to some of the macro.
I got you. I fumbled that. Sorry about that.
All good.
Procter & Gamble, EPS beat, cut earnings outlook due to tariffs. I mean, you're going to hear that a million times. Do you own Procter & Gamble?
I do own Procter & Gamble. Right. So for me, as it relates to a slowdown, clearly there has been a change in consumer behavior. And with staples like Procter & Gamble that are expensive, by the way, and are not immune to, obviously, the macro background, these are stocks that do get hurt in the near term. So for me, it wasn't a huge miss. You know, on the top line, they did beat on earnings. So I'm just going to kind of continue to watch this name and see how it develops over the next couple quarters.
What about PG&E? They reaffirmed their guide, Jim.
Yeah, just a solid utility, but it is laboring under the shadow of what happened in Los Angeles. They were not responsible for that fire, but there's still a question about whether Southern California Edison is responsible. If it turns out that was sparked by utilities, all the utilities, including PG&E, are going to have to make contributions to the insurance fund. So that's what everybody in PG&E is waiting to find out.
Bryn, I'm looking at the uranium miners ETF coming off its best day since April 9th. Fourth positive day in 5. You still in that?
I'm still in it. It's the fourth positive day, but I mean, it's down 30% the last year. There's all this talk about we're going to need more nuclear. China has no problem building nuclear plants about every 18 months, but because of the bureaucracy here, it's going to take us 7 to 8 years. So we'll see. This is on my chopping block. I've owned it for a while. It goes in fits and starts, so it's got a little bit of a bid. If it moves a little bit higher, I may punt this name just because there's so many other names I feel like are going to go higher.
Yeah. You know what we will do, Adobe? They're going to launch a mobile app for AI image generation as OpenAI steps up its rivalry there. Jimmy, you own that stock too. Stock's up a little bit today.
Yeah, but I mean, this is a value tech stock, and I don't think it should be value, but it is what it is. I've been in it probably about a year now. It has woefully underperformed. At the end of the day, I look at a company that is growing its top line by high single digits, in some years over 10%, and is projected to grow earnings per share at around 15%. You're getting this at a 17 times forward multiple. I think it is way undervalued. I'm sticking with it.